We're going to look at some of the homework problems. I want you to notice here, these are all the transactions. And you have to prepare journal entries, post to the ledger, and generate financial statements. So it's a lot of work here. And we're not going to go over every single one. But let's start with December 1. This person, Mr. Drake, forms a consulting business, and he invests $78,000 in it. So what do you think you debit? Which accounts are involved, first of all? And what do you think you debit and what do you think you credit? Well, we know two accounts are involved, right? One is cash, and the other would be owner's capital. Now, which do you think you would debit versus credit? Well, let's take a look on the general journal. You debit cash, and this is the journal entry right here. Debit cash, and you credit capital. See that? It's right there. Okay. Let's take another look at one of these problems. He buys $4,900 worth of supplies and he pays cash. Now these supplies are, he's not going to use all $4,900 in 1 month, so they're like prepaid. So you have supplies would be a debit because it's a some books will call it prepaid supplies because it is a prepaid expense. And so look here at the bottom, supplies $4,900 and cash you credit because cash is reduced. All right, let's take another look at another one. All right, let's say he buys another $10,750 of supplies on credit though, or on account from a supplier. Okay. Well, what does that look like? Well, which accounts are involved? Supplies and accounts payable, would it not? Okay, so let's take a look down. There you go. Number 4, supplies and accounts payable, you credit. Well, we'll do a couple more and then we'll move on. And again, if you have any questions, you can always email me and we can answer one specifically. Let's see here. Of course, withdrawals. December 11, he withdrew $1,800 cash. So what accounts are involved? Cash is one of them, and withdrawals is the other one. Now, which do you debit and which do you credit? What do you think? Well, let's go down to December 11. You debit withdrawals, you credit cash. Cash went down, so you credit it. Withdrawal went up, so you debit them. Okay. All right. Let's look at December 13. Kitchen Solution pays $4,800 cash for 24 months of insurance coverage. Okay. So again, it's a prepaid expense, prepaid insurance. So December 13, prepaid insurance is debited because it's an asset, and cash goes down. Okay. So these are all the journal entries. What they don't show you, but they should, at the bottom of this page, the last entry, you should have added up all your credits, all your debits, and all your credits, and it should come to the same number to make sure that you have make sure your debits equals your credits. On exams, I want you to do that. I want you at the bottom of each page, even if you are continuing on to another page, at the bottom of each page, when you can no longer make a journal entry, you would add up all your debits, and then you add up all your credits, and it should come to the same number. That way you can catch a mistake before you carry it forward, if the mistake has to do with, you know, um, addition, if you will. Okay. All right. Now, after you made your journal entries, as I said before, after every journal entry, you must post, and you post to the general ledger. So all these entries will be posted. Let's look at cash and capital as an example. Or cash, you see the $78,000, okay, right there. Okay, it goes to that. It's a debit there, so it's a debit here. And let's go to the capital account. Right here, it's a credit here, because it's a credit in the journal entry. Now they show a balance. On the exams, we won't have, it won't be like this. It'll simply be a T account. Now I talked about T accounts earlier. It's simply a T with the title of the account at the top, above the T, and the left is the debit and the right is the credit. And when you strike a balance, you know what you do that. You just simply draw a line and put the balance on the side that has the higher amount after you subtract. Okay? All right. Next obligation is a trial balance. Now, you see the balances here? Okay. There's no balance for receivable. This is the balance for cash. Okay, they added and subtracted, you know. Here's a balance for supplies, the balance for accounts payable, the balance for capital, and so forth. You're going to take those balances and put them in this form of a trial balance. You see that? These numbers all come from the balances in the general ledger, all of them. And if it's a debit balance, you put it in the debit column. If it's a credit balance, you put it in the credit column. And then they must equal at the bottom, total. Okay? Now you look at this, and you're going to create an income statement. And look at the order here. They're already in the proper order. And when I give you a chart of accounts, they'll be in the proper order. You maintain that order. So from consulting revenue on down is your income statement, folks. A trial balance should be set up so that you can do that. So there we go. We took those numbers off the trial balance. Every number here comes off the trial balance except for the totals. Okay? If we go back to trial balance, let's see rental revenue and consulting revenue. You see that? Rental revenue, consulting revenue, credits. But you don't put debit and credits on financial statements. But you see them here. And these are the expenses right there. So every number on here comes from the trial balance except for the totals, which you generate. And then you subtract the total expenses from total revenue, and you get the net income. And you're going to transfer the net income, as I said, to the owner's equity statement. Notice the heading here, folks. We know the name of the company. We know the name of the financial statement. And, of course, the period of time that we are discussing. A month that ended December 31. Next is the owner's equity statement. This start out with 0. Here you have an owner's investment, $78,000. This is the net income that came from the income statement. The withdrawals, again, $1,800. That came off the trial balance. And so we have a new ending balance for capital. Mind you, again, if this net income were a net loss, we would be subtracting it. Then we go to the balance sheet. Every single number here, except for the totals, every single number comes in the trial balance except for the capital. The new capital amount comes from the owner's equity statement. This came from the owner's equity statement. It's $8,195. But all the other numbers except the totals came from the trial balance in the same order. Okay? And this total assets, $94,245, should equal total liabilities and equity, $94,245, because assets equals liabilities plus owner's equity. Okay, let's go to the next problem. And again, they're asking you to make journal entries. Okay. Notice this. Number 1, August 1, invested $10,250 in cash and $44,075 in equipment. He invested those things. You can invest more than cash in a business. So what would the journal entry be? Well, let's take a look. You see that? Debited cash, debited equipment, and you credited capital, which is the sum of these two. Now, you could have done them separately. You could have said you debit cash and then credit capital for the same amount, $10,250, then debit equipment and credit capital. But the most efficient way is to combine it all into one journal entry. This is one journal entry here. It has two debits and one credit, and they equal each other. These two debits equal this credit. And notice how they skip a line between entries. Now, I don't require you to write the explanation down. You don't have to write investment by Harris, investment of cash and equipment. I don't need you to write down the explanation, but I need you to make it easier to read, to skip a line between journal entries, just as you see here. Okay, let's move to the next one. Here are your balances in each of the accounts. They want you to prepare an income statement. Prepare an income statement. Now again, where do you think, which accounts belong on the income statement? Well, again, fortunately, they have them in the order. Now, I may have it so that the order's mixed up, and you have to pick and choose what belongs in the income statement. Now, you know, consulting fees earned or any kind of revenue or sales goes in the income statement, and all the expenses go on the income statement. Now, here they're in the proper order right now, but I may not put them in the order just so that you will have to know what belongs on the income statement and what belongs in the balance sheet. So, as you can see, consulting fees earned, all these numbers came from the above, except the totals. Okay? Then we have to prepare an owner's equity statement. The owner's equity statement will include the income and also the withdrawal plus the investment. All these numbers came from above except for the total. Then the balance sheet. And there goes your balance sheet. Assets equals liabilities plus owner's equity. This is the new capital here that came off the owner's equity statement. Okay. Again, the same thing. I won't go over it. We've done it before. I'm asking you to make the journal entry, then the post to the ledger, and then create a trial balance. And by the way, keep in mind, this is the proper order. General journal, then the journal ledger or T accounts, trial balance, income statement, owner's equity statement, then the balance sheet, and then, not for this course, but later on, the statement of cash flow. And later on, you're going to learn that there's more than one trial balance. You're going to have, this is called an unadjusted trial balance, and you're going to have an adjusted trial balance, and then you're going to have a post-closing trial balance. You'll learn all that this semester. But for now, we'll just deal with the trial balance. Again, I like this. Here we have T accounts, right? See, there's no, you have the debit side and the credit side. You add up all your debits, add up all your credits, and subtract one from the other. And since there's more debits, the balance goes on the debit side. Look here, you have on accounts payable, this much credit, 10,400. Then these two are the debits. Well, you add up these two debits, subtract them from the credit, and that's your balance right there. I don't want to see numbers on both sides. Only on the side that had the large number, or the difference between both sides should go on one side, the side with the larger numbers, the larger amounts. Look at cash. Debits and credits, debits and credits. You add up all your credits, add up all your debits, subtract one from the other, and the larger side, of course, came out 260 ahead. Here, they negate, they zero out. Debit, you got your credit and your debit, the same amount, so it's zero. Okay? That's what you'll do on the exam. And the last one here, again, they want you to go through the same routine. Okay? All right, so that's it for this portion. And if you have any questions, of course, you know how to consult me, and we'll go from there. Okay, take care.